Thank you again for having me, and thank you both for being here to have a conversation from your perspectives about the world of FinTech.
I like talking to ubiquitous guys.
Ubiquitous, well,
yeah.
Let's start, in the last conversation I had with Randall, I asked him to paint a picture of what the 5G world looked like. Mm-hmm. And he really did paint a pretty interesting picture of what that world looks like. I want you to paint a picture of what you think, both of you, think the FinTech and banking worlds and payments worlds look like. Mm-hmm. Not 10 years out, because that's always made up. But 5 years out, what does it actually look like? What's different? How do we all live differently, both on the consumer end of it, on the B2B end of it, on the lending end of it? What's it look like?
You want to start? Go ahead.
So I think that the biggest difference will be the Internet of Things. And I think that if there are going to be 20, 30, 40 billion connected devices in 5 years' time, and they're all able to operate through Randall's 5G system at lightning fast speeds with small processing units, you're going to have a completely different relationship with consumers and with businesses through that Internet of Things. If your car, when you drive up in your car to a gas station, you can fill gas. You could pick up a Coke in the convenience store and take your car for a car wash, all seamlessly done with your identity passing from one to the other, payments being made simply. That's the kind of world that isn't 20 years away. It's 5, 7, 10 years. You can take a guess. I don't know whether 5 is the right answer, but it's not 20. So that's one. The second is the amount of data that's being generated out of that world, Andrew, will be, I think, way more than we understand. Already more data is being generated every year than was generated some years back. And all these connected devices are throwing data. And I once said data is the new oil. The funny thing is oil is finite. Data is infinite. In fact, I wish that oil was like data. You could make a lot of money for a lot of time. But it's finite. And this thing is infinite. It's going to just keep coming at you from everything you're using, your glasses to your watch, to your shoes, to your car. So that's the second thing.
And who's going to collect it?
People who are interacting, and it should belong, I actually have a point of view that it should belong to the consumer whose data it is, and they should be in charge of it, and they should have the right to use it, and they should have the right to be able to use it for their safety and their convenience. And it should be done with very open standards. And so I think the data is the second part. And the third part connected is that the world of cybersecurity and safety will multiply many times over, because along with us having this conversation, there are people who are not such good people sitting and having the same discussion saying, boy, good times are coming. And I think we need to just be careful about that, because convenience and security currently are seen as two sides of a coin, and it's not fair. I should be able to get convenience and security as a consumer. And I think those are the three biggest things. Yeah, lending will change from this method to that. Somebody else will figure out a new model. Somebody will price differently. Those are good things. They're important things, because private enterprise should be rewarded for innovation. But to me, the big picture is these IoT, lots of data, cybersecurity, that kind of stuff.
So I agree. I almost understand everything you just said, which is terrific. But I agree. And let me bring it. But let me take it one step further, and that is, I think that let's talk about safety and security. Right? Within the next 5 years, there will be no passwords. There's no sticky things. There's no, gosh, do I remember it's my date, or it's my wife's birthday, or what the hell it is, right? It is your body. Right?
But if you don't remember your wife's birthday, you have a different problem.
No, I know. I do. Yeah. April 8th.
Just trying to be clear.
April. Yeah. Anyway, but that's going to happen, and I think that's really important, because what it does is it means that the ability for imposter fraud to occur goes down significantly, right? Because your body is going to drive the security of your information and your money. That's one. I think two,
and you think we really are closer on that front?
Absolutely. I mean, when I think about what we do today, and you're doing the same thing, and that is our commercial customers can log on using an iPrint, right? We can log on to mobile banking using your face, right? Your thumb, right? Or your voice. Now, the reason that is a little bit complicated is everybody interacts with their financial institution a little bit differently and has a different favorite device. But within 5 years, we're done with that. I think that's really, really exciting. And I think the other big change that'll happen in the next 5 years is that all of the consumer's financial data is going to be in one place. And again, we're doing that today. It's a little bit too complicated right now, but knowing where all your data is, having it in one place. I mean, what we developed something called Control Tower, and so we're doing that right now, right? So I think that's exciting.
What is that experience going to look like? This idea that everything's in one place, it's all tokenized from all of these different financial providers, right?
So you pull it up, right? If Tim Cook was here, he'd be happy because it's an iPhone, right? You pull it up, you look at it, right? Which I could do in a second.
Right.
And all of my financial data is going to be there. I'm going to be able to turn it on and off however I want. I'm going to know where I have made connections to other providers. It's going to be there, and I can turn it on and off whenever I want. It's going to be in one place. Right. Today, when you think about from a consumer standpoint, right, well, some of my data might be here, and then other data might be on my laptop, data may be with my tax, whatever, but it's all going to be in one place.
And tell me about this, world of lending, huge business.
Yeah, we're the largest lender in this country. It's very important.
For the last decade, if not more, there was a view that the lending business, the old line banking business, was going to get disrupted by these new upstarts who were going to do peer-to-peer lending. They were going to come up with all sorts of newfangled FICO scores. There was a revolution in the world of lending.
Right.
You say there is no revolution.
I don't think there is a revolution. I think what we've seen is what we've seen in this country in every cycle, and that is there are always non-bank lenders, right? They interact with customers in a different way. I think this cycle has been fascinating because there have been really interesting FinTech lenders that have come up with different algorithms. Now, they haven't been tested in a recession, so it'll be interesting to see how they work. I'm not saying they will work or won't work, but they haven't been tested. But in addition, the way that they access customers has really improved a lot, and the speed at which they make decisions has improved. I think that's all really positive because it's meant that we've had to make the same changes. That's good from a customer standpoint. Right. But in terms of, is there some new algorithm with information that nobody's figured out that's going to absolutely change lending? I'm not a believer in that.
Sandra, I think the only I'd add to that, really interested to that topic is past scores used to look at past behavior and attempt to predict future behavior based on that. And the financial crisis proved that all that was wrong because somebody who had a FICO score of 780 went from 780 to 570 in the course of 2 days by losing their job. Right. And I think what scoring and algorithms are trying to do today is to use other data to be able to be more thoughtful about what the real risk or value of this customer is going forward. And I think transaction data of the type that he's referring to kept in one place, the amount of data he can see about a consumer to make a sensible, or a business, to make a sensible loan to based on transaction knowledge will beat any of the traditional scoring methods hollow. And I think that's the single biggest difference that's coming out.
So when we make a small business loan decision for a Wells Fargo customer, we just use their deposit data that we know, because we know about that customer, we know what the inflows and outflows in their accounts, we can make that credit decision, and now we can make it in 30 seconds.
Would you be happier if you were Square, where you could actually see SKU level data?
No, not necessarily. I mean, I think it's interesting information, but it's not necessarily required from our perspective.
Yeah. Both of you have talked a lot about how technology is and FinTech itself is going to create a more inclusive world, that you're going to actually be able to lend to people and bank people that historically haven't, that you're going to be able to finance people and give people either credit cards or access to credit in ways that they haven't. What does that look like?
So I'll start. So we're piloting a new account product called Greenhouse in 7 states right now. And what it is it's an all-mobile debit card in the account. You can't overdraw it. Right, and it comes with budgeting capabilities that it's almost as if it's a forced budgeting capability, but that's what consumers really want, right? Because it helps them educate themselves in terms of how to manage their finances. What's great about that is that because you can't overdraw the account, it's going to be available to so many more customers, because the reason that we might turn a customer down in terms of a new account is because we're concerned about their credit because they might have an overdraft. We've taken that off the table. And guess what? It's free.
Ajay?
So some years back, I made a commitment at an IMF World Bank meeting that I would find a way to reach 500 million people and get them to be financially included. And there was no
These are big thoughts, by the way. I mean,
there was no scientific basis to the commitment. It was like let's go try and make it happen. We've reached 380 million. I've got another year and a half to go. I just signed a contract in Mexico with the new government for distributing 20 million benefits to their population through a state bank called Bansefi. So that's 400. We'll probably find a way to 500. But in addition to that, we're trying to reach businesses. So I'll give you 2-3 examples, which I think technology and data have made possible that didn't happen earlier. So if you're a small micro business and mostly run by women outside their homes for a few hours, you're kind of outside the banking system in most of these countries. Nobody can lend you money because they don't know how to underwrite you for risk. And by the way, the central bank of that country applies a higher risk-weighted capital cost to that kind of loan. So you double disincent the bank to doing that. But if you could go to that place and you could digitize the supply chain, and Unilever comes at 10 o'clock every morning on a Monday, and Nestle at 2 o'clock, and some water company at 3 o'clock, you actually get that data, you know exactly what that person is buying, provide that data to a bank like his or banks locally, they can underwrite that person much better than you can underwrite with any other method. You can reduce the cost of lending. You can get paid back by the distributor who is actually providing that product. You get a much better output of result for everybody. Unilever sales, we've done this actually in Kenya. Their sales are up 30% in those 20,000 stores. All of them are paying back. Everybody's happy. The government can declare victory on SME lending. That is the kind of thing that could not have happened without the technology and data that today you can work with. You can do the same thing for getting power to the bottom of the pyramid. You don't need to provide a power grid connection to every last house. It's really expensive. You could put a solar battery, connect the cell to the battery itself through the Internet of Things, put a QR code on it, pay what you need to use it for 8 hours that night. There are so many things you can do with, we're doing that too, by the way, with a company called M-Copa in Africa. We're doing farmers networks where they no longer need to go to a physical location to buy fertilizer, to buy seeds, to sell their product. You can connect into cooperatives through phones. There's so much that is going on with technology and data that people like us could not have done 5-7 years ago. That's all financial inclusion. That's technology for inclusion. And I think we're at the beginning of a revolution in that space.
Wanted to ask you about a topic that I know a lot of people have been talking about in the halls, and I briefly asked Randall about his relationship with Apple, but you, Ajay, now have a big relationship with Apple. Your cards are also on Apple, but this is a separate issue. Apple obviously announced this major new credit card that runs as a Mastercard on over Goldman Sachs.
Yes.
Tell us how that happened to the degree you can.
Serendipity, I'm just kidding. Who the hell knows how it happened? You can ask Apple.
But but in terms of keeping Apple
I
on,
beat Ryan to it. How's that?
Yeah.
but in terms of keeping Apple within the ecosystem, right? I mean, they decided rather than try to build their own system,
you mean
if you
that
will.
way? Okay. So I think some time back, when you go back to the launch of Apple Pay and the like, that itself was an indicator that I think most companies understand that in today's world to succeed, rather than try and control everything yourself, the best way to work is through partnerships. If you can build the right partnerships and get the right stuff from guys like Ryan and us on the one hand, and get the right stuff from banks on the other, and you do what you do best, which is Apple's case, is the UI and the connection to the consumer, then there's a winning thing to be done for all of us. Right. I actually think that model is getting relatively well embedded across the system, provided you add value. If you just want to ride because you're there, that's not going to work. You add value, they'll work with you. And I think this card is just a continuation of that thinking. It's not something new. It's part of that thinking.
And so how do you think this card is going to change the business?
For whom?
For the customer. In terms
of... For
the
consumer?
For the consumer. And are other companies, banks, cards, et cetera, going to have to create new UIs that provide more information about the merchant than historically have been provided? I mean, that's one of the things that Apple's trying to provide.
Yeah.
Some of the privacy concerns and issues that they are trying to contend with.
Look, Apple's got a certain philosophy and commitment to certain aspects, including privacy. Tim the other Tim has been out there publicly discussing it. So they've built those features and factors into their product. How is it different for the consumer? First of all, it's a digital-first card, which is a relatively new thing here. We still tend to get cards in the mail with booklets that tell you what your rights are and not are and so on. But in a digital card, digital-first card, that's a relatively new thing. There is a physical card that goes with it. So in case you're somewhere where Apple Pay is not accepted, which is a lot of places, then you need your physical card to work. There's a great deal of security inbuilt into it. Apple is quite committed to security and privacy. So every transaction is tokenized, card numbers are tokenized. There's a whole lot of factors built into that. But when you talk about the consumer's experience, if you happen to be using that card in your phone at a place where Apple Pay is accepted, either with a tap or online where Apple Pay is accepted, it'll be a very seamless experience. It'll be a typical Apple experience, straight through, very simple. But there's a lot of places where Apple Pay is not accepted, and then it'll be like any other experience, where if you go on Google, you go to a merchant site, you're then shopping there, you're going to have to go through
But do you think that whatever they've done is going to push you and others and Mastercard and others to provide more extensive, not just UI, but more information, to the extent that they're going to have now more information right on the app about the merchant? I don't know if they'll provide SKU level data for products that are being purchased in that way.
We're not giving them any more information than we would give anybody else.
Yeah,
First of all, I don't even know your name when you use your card or your account. I don't know what you buy in your school. Actually, you shouldn't want me to know. Right. So in general...
By the way, is that a bug or a feature?
Is that?
No, really.
Yeah.
Because you're right, the SKU level data doesn't go down the network. But is that a feature or is that a bug in a fully transparent world? Actually, as a customer, I've actually thought about this. When I've gotten my credit card statements, there's sometimes when I look at the merchant, I don't really know who the merchant is. This is one of the things that Apple's trying to address. But then I kind of want to know, what did I buy from them?
Yeah.
And I don't carry all the receipts with me. Do you think that 5 years from now,
why are you spending so much money?
I had a joke that would
Okay.
not
I'm just
work.
checking.
It was a family joke. Anyway, yes, we're spending too much.
Okay.
But
you should be able to remember those things, right?
The fact that you don't remember what you bought from a merchant, I think you should change the topic and move on.
Yeah.
This is a losing proposition.
Losing proposition?
Yeah, move on, Andrew. You're
So I think this is really interesting because Apple is offering additional convenience and service to their customers, and they have their customer on their phone. I think that's great. Right? I don't think it necessarily means that it's going to fundamentally change the way people make credit or how they buy things. I think it provides some convenience for Apple phone customers, but that's it. That's great. Right?
And that's the end.
I think that's the end.
Okay. Separately, one of the other conversations I had with Randall earlier was this one about the international landscape, China in particular. And one of the things that I've noticed, at least in New York, and it might be here too, I don't know, is that Alipay is now in the back of taxicabs in New York City. And in a number of places, you're seeing it more and more in the United States, typically around cities and places where there are consumers who are tourists and the like. But the larger question, and part of it's a regulatory question as well, is do you think that that is just the front end of a larger move by Alipay and perhaps other Chinese rivals and things to come to the United States and eventually provide credit and provide other meaningful banking products?
So I'll start. And if I'm Alipay and I look at the opportunity that I have in China, and I think about population growth, and I think about concentration, I think about penetration, and I think about the U.S., why would you want to do that in the U.S. when the regulatory environment is much more complicated, the customer is much more complicated to obtain, and you almost have a monopoly in China? Where are you going to invest your money? I think they're doing that for convenience, for students, tourists, as we were talking about earlier today. Right? I don't think it's going to fundamentally change the landscape.
Look, I think that they're following tourists, they're following students, they follow businesses. The Chinese model has done that very systematically over the years, and you should expect them to do that. That's why it's showing up over there. I think the bigger question there is, will that mean that it'll become bankers here? yeah, well, they're going to have to go get licensed. They're going to have to be regulated. They're going to have to be managed the way he is. And he was introduced as having the toughest job in America. Well, I'd love to see a Chinese banker having that job in America. That'll be interesting. And so I think this is not that simple, one. Two, the way that the Chinese banking and payment system in specific has evolved has been created by a very specific set of circumstances where people like us were locked out from there for the past, and the local card association, China UnionPay, wasn't keeping pace with these kinds of developments. And I think companies like Alibaba and Tencent, WeChat did a fabulous job of building outstanding consumer UIs, a bit like the Apple UI, really simple, really easy to use, and they built links to all the banks. The Chinese government has since begun to change the rules on the ground and has created a clearinghouse in the middle to which all these digital players need to connect. That's like us, like China UnionPay. They're changing what products go through. They want to approve the pricing. So I think the market is changing for them in China as well. Right. I think that's part of the reason why they're expanding outside, because they need to get the next click of growth. I just think this is good. Competition is good for all of us if it's the level playing field. Create a level playing field and come on and compete. It's good for everybody.
Completely agree.
Do you have any expectation that 5 or 10 years from now, it'll be an open market and you'll be there? Or you'll be there?
In China?
No.
Yeah.
Oh, I would love to be. Expectations is, I would not be willing to hazard that because who knows? But I would love to be. I have made no secret of the fact that I have attempted to be a part of the local Chinese market for all my 10 years as CEO.
I don't think
And
so,
I hope it's not 3,000 years, but
One of the other issues that you touched on just so briefly that I wanted to come back to is the issue of privacy and also identity, and the role that both of your firms and the FinTech world, if you will, may ultimately play in the idea that I have one identity. We were talking backstage about the idea that you have 70, 80 million customers, and you have the identity right there.
Right.
And if you put the top 4 banks together, they pretty much know everybody.
Right.
And so all of these questions that we have about identity, whether it's on social media or elsewhere, if you were to try to use all these other, the information you have mixed with other information and data that's out there, you could actually probably solve this problem relatively quickly.
Well, again, the question is what problem you want to solve. I think if the issue you want to solve is to make sure that we know who our customers are and they're legitimate customers and they're following the rules and regulations of this country, absolutely. Because the standards that we have to operate in, which are appropriate, right, are pretty high, and they're different from a lot of other industries. And I think that's the question. If the standard, if everybody wants to play by those same standards, then I think the likelihood of there being a lot of confusion as to whether or not these are legitimate customers goes down significantly. But that's pretty expensive to do.
And also is a much higher friction point.
It's
Meaning right now, for so many other services that aren't banks,
correct.
the onboarding process is a lot easier.
It is.
But do you think that onboarding process across the internet is going to change over time because of this issue?
It could, but again, I think it's a question of what problem we want to solve. I think if what we're trying to do is give consumers the ability to own their own data and to be able to control that data and not share it, what we were just talking about there is just authenticating them.
Right.
Right. I think the bigger question is how are we going to do that? That's a lot more complicated.
Yeah,
We've talked about it a lot.
Yeah,
But,
yeah. I think that in that Internet of Things that we were talking about at the beginning of the conversation, take that example of the car pulling up to a gas station and so on, and Coke and car wash. Andrew's identity has to pass seamlessly from the guy who was in the car filling the gas to the gas pump, to the guy who bought the Coke, to the guy who put his car in for a car wash. You want all that to happen safely and simply without you having to take out anything to prove who you are. Or let's say you want to hire a car and you don't want to give your driving license to somebody at the hiring desk, because now they have, by the way, your photograph.
Right.
They have which car you're allowed to drive. In some countries, even your national ID number. They have your exact birth date, which they don't need. And of course, they have your full residential address, which they don't need to rent you a car. So our systems are built on providing more information than is required for the actual use for which that digital identity in the future is required. If all you needed was a yes/no answer, Tim is greater than 21 years of age and he's licensed to drive. That's all you need to rent him a car. Why are you giving all the other stuff? And if all you need is to say that I'm old enough to buy alcohol on the web, so when it comes for delivery, I'm more than 21. I don't need to give you my driving license to some kid in a brown uniform whom hopefully you'll never see again. And he takes a photograph of your identity on a phone. Now, on his phone is all that information. I think the system has to evolve if you're going to do this IoT properly to where that doesn't happen. And instead, the consumer's privacy is better protected by giving yes/no answers through parties who can go and pull the yes/no information from distributed databases. Putting all the information together is like painting a bullseye on your forehead and telling those other guys to come and steal your data. So let it lie. He's got great information. Bill's got great information. Other bankers here, people, Randall has great information in AT&T of where you are in a geolocation sense. Let that be where it is. But using tokens and cryptogram protected systems, can you bring yes/no answers to satisfy the need and actually give the consumer back their right to privacy? Right. That's what I'm discussing.
And who do
That's a big deal.
Who do you imagine develops that product, if you even just...
I don't think it's one.
Consortium.
No, that's what I was.
Is that
thinking.
financial? But is that financial services? Is that the financial services industry leading that
never believe
process?
No, I think it's absolutely going to be a consortium, and this gets back to Ajay's point about why Apple Pay developed, or why there's a credit card now in Apple Pay that you're involved in, and that is that we all bring capabilities to the table, and it's going to be much more cost effective and much more convenient for customers if we work together.
Correct.
So it's got to be a consortium.
I mean, banks, when they do KYC, do an amazing amount of work and information collection. And I think that's a great starting point, back to your first question. But it's not the only piece of information you need to do what I just described as a bunch of things that a consumer lives through every day. So banks should be the cornerstone of it in many ways, but others need to be there too, so the richness of information is available that can help meet this need. We're actually in the process of doing something like this with Microsoft as a partner and a bunch of banks and others in one country overseas, which shall remain unnamed, a bit like those secret locations that people go to. But the thing is that idea, it comes from this distributed identity, allowing the consumer to be in control on a secure element on their phone, to be able to say, yes, please go and collect the yes/no information that I'm above 18 and give it to this guy.
And I think an important overlay to all that is that consortium members, whatever that looks like, are going to need to be very comfortable with everybody else's cybersecurity capabilities.
And is that okay, I'm fascinated by this now. Is that a regulated process? Meaning, when I said who's going to lead this is the financial services industry, is it a consortium, or do you think that we're going to get to a point where a government player says, you know what, we agree we want this kind of identity situation. You're going to be plucking tokens from 12 different places, and ultimately this is a regulated
Who knows?
piece.
But I can't see in America, look, we don't have a common driving license across 50 states. I really can't see us getting to the stage where you will...
I think if we wait for that, it'll never happen.
I don't know. I don't think it'll happen that easily in the United States.
I don't either.
Or in Europe, for that matter, where people don't want the government knowing everything you're doing and handling. I actually think a consortium of private enterprises that cares deeply enough about your privacy, with data kept distributed, is probably the best way for this to happen, the most efficient way for it to happen.
Okay, totally different question. The word security has been used multiple times during this conversation, but we haven't really dived deep into that topic. And I would just ask it as a layman. What do you think the chance is that I will wake up one morning and I will get out my phone, I will look at my bank account, and not because of my overspending that I don't remember about, but I will look at it and it will all just zero out?
Not if you have a Wells Fargo account, there's no chance.
Thank you.
Now, if you've got a bank account with somebody else, you don't have one, man.
I think that probably. Thank you. I think it's unlikely that that's going to happen.
It's my nightmare.
Right.
It's everybody's nightmare.
But I think it's more likely, right, that somebody can steal your identity and could go into your account and empty it out because somehow they've taken it right? Because you've accidentally given it to them, or you shared it in an odd way or whatever. That's more likely, because you know what? That happens all the time. That's imposter fraud, and that's why we've got to get back. We've got to convince the American public that it is okay until we get to the ability to authenticate them by some part of their body. That two-factor authentication works, because it does. If the problem is, it takes 5, 10, 15 additional seconds, right? So that's what, if I were you, that's what I would worry about. So the way that we think about it is, how do we get customers to authenticate? Or then how do we use the data that we have and use artificial intelligence to scan across transactions that look odd? I'll give you an example of one that happened over the weekend. We had one of our middle market commercial customers. Somebody had gone in and had stolen their identity. They changed authentication, and they sent $5 million to a bank that company had never sent $5 million to. What we do is we look at those types of situations. So anytime there's a change in any of the information and the authentication, then we look at the next few transactions, and if all of a sudden there's a new transaction that doesn't make sense, a red light goes off, we call the customer and say, hey, you know what? I think you got a problem here. We were able to stop it and get the money back for them. Right? That's where we can add value, right, to prevent what you just described. Now, that's a commercial customer. We've got a lot more work to be able to do that for consumer customers, but we'll get to that point.
What's the weakest link in this whole system that you see right now?
The weakest link is either the small business or the individual consumer. And the reason for those two choices is small business cannot afford to spend the kind of money that seems to be required to keep yourself up to date with the tools you need to keep upgrading for. In fact, a number of us in the banking and payments industry have discussed ways to get small businesses to have access to tools that allow them to raise the level of water in the river so the thief can't swim as easily. And consumers, because consumers seem to choose convenience, and convenience is everything from not changing your password. I mean, the most common password in the United States is password. And the second most common is 1, 2, 3, 4, 5, 6, 7, none of which are particularly smart. Right. And then it gets crazier, because if you think your smart password is, Wells Fargo 1, that's not. And if you think it's Wells Fargo #1, that's also not.
You've now told everybody all my passwords.
Yes.
Will you stop that, please?
Yes.
Jeez.
And if, by the way, you think it's capital W, Wells Fargo #1, that's also not. Because most 10-year-old kids with a computer can break all that. So I think that's why when he started out saying passwords will be gone, we'll go to something else, he's absolutely correct. That's the right way to go. But the weakest link today is in the consumer and the small business.
How does the blockchain...
I'll give you another small example.
Yeah.
Today you go, and this is something I've been agitating for a while. I believe we need the equivalent of a food nutrition label for the gadgets we buy, but the food nutrition label is a cybersecurity level label. So let me give you an example. You buy a TV today, it's $1,000. You have no idea if it's safer than the other TV that's $1,200. To understand the difference, you have to be a cybersecurity geek to read, comprehend, and figure out that that actually isn't worth the extra $200. That's unfair. If you want to make this happen properly for the American population, you should have the equivalent of a food nutrition label that says, or like a restaurant grading system, A, B, C, D. Well, that TV is a B, this TV is an A. Then consumers can choose what to buy based on knowledgeable consumers as compared to non-knowledgeable consumers. Those are the kind of things that we have to do in our country in the next 5, 10 years if this Internet of Things is going to become a reality. Otherwise, it'll be a nightmare.
Yeah.
Neither of you have mentioned the word blockchain during this conversation, and that often gets introduced when people talk about privacy, when they talk about security, all of these types of things. Yeah. How does that play into this conversation in your mind?
I think I'll start. I think it may over time play. Personally, I think blockchain has been way over sold in terms of how quickly
We're finally at a moment where people are willing to say out loud that they think this whole thing's hype.
Well,
Right.
but look, there were
But
a
not
lot
just Bitcoin. I mean, we're not talking.
No.
We're talking the whole technology idea.
I mean, I think the fundamental technology, right, is very, very interesting. I think it's been very slow, right, to roll out, and we've got a number of pilots. I mean, we just did a pilot with Commonwealth Bank in Australia related to using this distributed ledger technology for a trade transaction. That was great. It was one transaction. Now, we've got lots of consortiums, we got partnerships, we got individual investment. Over time, I think it will have an impact. But you know, if you turn the clock back a few years ago, by now, right, it should have completely changed the industry. Right. And that's just not the way it works. Yeah.
This digital identity distributed system, maybe blockchain can help with. I think blockchain could be very interesting. I just think the business model is not yet proven.
Right.
And that's what Tim's getting at. And I think the second issue is there's got to be a few infrastructural elements that have to get resolved. I mean, if he gives me a mortgage and or rather, let's say he sells me his house.
Dodgy credit we'd have to work through, right?
Yep.
Yeah.
Right.
Okay.
But let's say I buy his home.
Yeah, okay.
And he warrants to me that there's no asbestos in it. And then it turns out there is. And I come back and have a dispute with him. Today's system, I could go to court, go to a judge, produce documents to say I bought the home, blah, blah. What if I go there and say, I did all this on the blockchain, and the judge says, so can you give me proof? And it's 50,000 of my best friends with anonymous names, and I don't know who they are, but I did buy the house. That's not going to work today, in today's legal system. So that's why permission blockchains came around, because that creates 6 parties, a mortgage broker, a lawyer who could show up. I think a lot of this has to improve and change over time. We've got the 3rd largest number of blockchain patents in the world today as a company. We are deeply vested in a few ideas in it, but I don't know how the business model will work. Proof of provenance could be one. We're working with pharma companies to figure out if people can take bottles that are thrown away from our homes and repackage them with fraud drugs. Can we use the blockchain to provide authenticity proof at each link of the supply chain? So when you use that bottle a second time, it lights up and you don't use it. That's interesting. Could I use it to prove that this diamond is not a blood diamond? Although these days diamonds can be manufactured in laboratories. But let's assume it's not a blood diamond. Or could I use it to prove that this shirt is actually made from Egyptian cotton and that particular bale of it? Or could I use it for a food company to allow them to ship the product in advance while the testing is going on, because I know exactly which truck that brought milk from that village ended up being contaminated, so I know which 3 cases of milk powder need to be recalled. That's interesting. There are interesting possibilities with blockchain, and I think to ignore that would be a bad idea. That's not what we're saying. We're just saying we don't know the business model yet.
Okay, final question from me, and it's a very practical one, and maybe everyone in this room is suffering from this too these days. I try to live a cashless life. I really do, even though the Sorkin family is overspending, as we've discussed.
You told us that.
By the way, Wells Fargo will give you a line of credit.
So here's the problem.
You're good for
in
it.
a cashless world, if I'm really going to not have cash on me,
Yeah.
this becomes a real problem for tipping. I like to think I'm a good tipper. But if you have to tip somebody at the door or wherever it is, or if you're going to grease somebody at the maitre d' or whatever it is that you do, how are we all going to do this? You don't do that, okay. How is that going to happen in the future? I was actually just had to deal with this, and I felt bad. I'm at the hotel, and I'm saying to the guy, "Oh, I'm really sorry, I don't have any cash on me. I'm going to help you."
Yeah.
But now that's happening more and more, and that's not because I'm hopefully a bad tipper.
So I don't think we can get to the point, right, where we can live in a cashless world unless we create a more inclusive environment to allow everyone at every income level to have the same accessibility to financial services. Because you could do that, right, if the...
I could Venmo them or Zelle them.
Zelle, don't say that. I'm sorry, say Zelle. That's okay. But
There,
that's my point.
I see Mr. PayPal over there.
No, I'm sorry. Dan, I'm sorry. Venmo's okay. Thank you, okay. Right, but where I was going is we've got to create a more inclusive world to allow that to happen, because the valet, right, or the bellhop may not have a bank account, right? So until we do that, we're going to have to carry cash around if you want to tip.
I want to say, I was in Sweden a few weeks ago, and they're really worried because they're down to 5% of cash use in retail. I mean, even to use the public toilet in Sweden, you've got to send a message on a phone. It gives you back a code. You tap the code into the keypad and the damn bathroom opens. So I call that tap and go, but that's the wrong kind of tapping and going. Right? And I mean, that's way over the top, man. So the issue is, if you're down to 5% there, That's the problem, because older people may not feel comfortable. People who aren't banked as much may not be comfortable. I think you shouldn't take cashless to mean zero cash. I think cash has a role to play in inclusive societies, unless we can do what Tim said.
Yeah.
Until then, there's going to be a role to play. I'm just saying, should it be the role it is today? 85% of the world's retail transactions are still in cash. That's a lot.
Yeah.
Please join me in thanking
Great.
Tim and Ajay. Thank you guys for the conversation.
Thank you very much.
Thanks, Andrew.